Hey, it's Mack with PriceActionTradingSystem.com. It's Thursday. It is January the 21st. This will be our chart lesson for the day. And for the most part, we just have a trading range here. We spent a good bit of the day trading up, really most of the morning, but we were just going from one end of the trading range to the other. We did get a break higher. Of course, it failed like you would probably expect, and then it broke and came back down inside the trading range and finished. I guess we finished slightly up. We closed down here yesterday, so we did finish up by a few points, maybe 5 or 6 points. Not much change in the end, but still lots of movement, lots of volume. So pretty good trading day. We really had a two-tiered range, or I'm sorry, not a two-tiered range, but a two-tiered channel working up, and that's why I believe this was able to break out here. The the channel gave it a boost here, but notice how it couldn't get back to the top. That's a signal you got to be careful when you get back down here to the low. Just need to be careful. It could, generally, if you come up short, you're either going to come up that short on this side or you may overshoot it that much, but this thing just reversed. And it turns out that it's probably more of the trading range takes precedent over this two-tiered channel working up, and so that's not surprising because the channel is the bigger pattern and was in play most of the day. But you can't ignore this trend line working up through here, and you could have found this relatively easy off these two lows. But even if you didn't, if you just drew it here and drug it down to there, that would have given you these two by the time we got back there, and this one here. So I'm going to back out now, talk about the trades. And a couple of you had mentioned that maybe I wasn't backing out enough recently, so I'm going to make sure I try to back it out where we can see everything. Just so many bars and all lately, it makes it really hard to see without backing way out. So, but when I came in, we had this trend working up. It bounced off. You can see the support across there, real obvious. We bounced several times around 1842 there. We did go a little bit lower a couple of times, but we ended up, notice this is like a double test. If I'd have been trading, this would have been a nice long here because notice we made that low right there and then we double tested that. And then we'd had some support there before. That would have been a great setup right there. But that was early this morning, like 6 o'clock, a little after 6 o'clock. By the time I got in, we were already trending higher. And notice this is a double bottom, so you can count that as a new low. It's not perfect, but that's close enough. You'll hear me talk about that a lot. But once you can count a double bottom as a new low, or you can count this as the new low, and you can count the whole thing as a low. And I'll usually count it both ways. And if you do that, coming back up here, you get a failed second entry short right here based off this being the low or that being a double bottom. So first entry, pull back second entry, and that's a nice bullish reversal bar, but you got to go long right into that high. It's still not a bad trade with everything moving and the trend line holding right there. I'd probably give that one a green one on its own. I originally circled them both with one circle, but really that one should probably be listed separately. So I'm going to mark it green. And if I was in on that one, I would add on here, but I really liked it better when it tried to go lower again and failed and then shot straight out up the top. Just be ready to go long there. Already have your stop in place. That's a great setup, and you can see it. And you're looking for prices to most likely come back up and test these highs, and we could keep going, but you're looking for them to come back and hopefully test those highs. And you can see that's exactly where it goes to. It makes a little double top there, and there's a second entry short, but it is a good ways away from the EMA, but that bar is just a little too bullish, and this one's a little too neutral as well. So I think you're better off to wait on that failed second entry long. And notice the new high. You pull back first entry, pull back second entry. It fails. Go short right there. And on a failed second entry, it doesn't matter what your signal bar looks like. And we hadn't been back to the EMA. We didn't even get back here, so we got plenty of room there. So I like that one. I really would have liked to have entered here too, and it's tempting. But that's right into that EMA, and you never know when it bounces and goes higher and makes another new high. We do have a close outside here and a new high on this little trend, but sometimes until it kind of works through that EMA, you need to be careful especially when it's been that bullish. If it hadn't been this bullish on the way up, I probably would have said, hey, this might be a good entry here. And if it would have turned back up there and touched the line and turned down, I would have liked going short there with that big negative bar, but it didn't break higher, so I just wasn't crazy about it. But if you got in here, you got a chance to get some of this, and then you get a real nice setup here. Notice the new low, pull back first entry, pull back second entry. This is a perfect entry, as easy as they get. Somebody sent me an email today and they asked me, what is the most reliable setup? And we're not really pattern traders, so I'm hesitant to ever say what's the easiest pattern or what's the most reliable pattern, because we're not pattern traders, and you got to understand that. But the best trade, the most reliable trade, is a second entry with trend. Doesn't matter whether you're going up or down, and especially when it's off the trend line, and particularly when the trend line and the EMA are combined, like right through here. And notice what you get: pull back first entry, pull back second entry. So that is a second entry short with the trend, off the trend line, key entry point, off the EMA. Look at that. That's as bearish as a bar gets. It opened and went higher and turned and closed on its very low. That's a very bearish bar. That's your perfect setup. It doesn't get much better than that. And you see how it just took off. It just races down. And you could have gotten several points out of that one trade right there. And then notice what happens. You get another one. Now this one is your first break of the trend line. Normally this would look very similar to a reversal pattern, and it does. But that's what I'm talking about. You can't just be a pattern trader, because there's enough reasons to think about this maybe going the other way. But that's the first break of the trend working down, and it looks like a trading range, and we haven't got to the low yet. So you expect it to probably try to get to the low. So you don't want to go long without a trap or a perfect setup. And this is really probably a little steeper than this. It's probably more like this right here. And you get your close, a move to a new high. And so that's one reason to go short. But the big reason is you got this trend moving down. That's the first break. It's two legs back. It's a second entry short. It's another bearish reversal bar, very bearish. Just go short right there. And if you took this trade, if you just took these two trades here, which are textbook, you could have made multiple points. And it doesn't get any easier than that. That's, if you want to see a textbook setup, there's two of them right there. This one's not quite as good as this one, but this is still a pretty good one, because you're looking for it to test this low, and you're looking for it to go down to the low here. So if you're looking at all the, that's why I'm saying we're not pattern traders. We're looking at all the pieces. And if you understand what's going on, that prices are trending down, and that's your first break of a trend line. So most likely you're going to at least test this low, and you may test the low of the range. And look, we go right down to the low of the range and we bounce. Right, exactly where you would expect it to go. And if you caught this one trade here, if you were just patient and waited on just one trade today, if you caught this one, your runners are easily safe. I had that same conversation with that same trader. He's saying he's telling me that the math's not working for him. He gets stopped out on all his runners, and he gets a couple trades right, and then he gets one wrong, and it takes all his money back. Well, that's pretty typical. If you've got to get your win percentage up. You've got to get some runners occasionally. But more than anything, you got to be right more than you're wrong. And you got to be patient. You got to really understand what's going on. You can't do this for a few months. Most people probably can't do this for a year and understand what's going on. It's not easy. You got to not only learn the rules the way we teach them, but the biggest thing is you got to get experience. And I watch this every day, all day long for years. And you come in here and watch it for a couple of months, there's no way you're going to have near the experience that I've got. And there are people that have got a lot more experience than me, trust me, that are better than me. And so you're not going to win many of these battles early on. If make sure you can do this on the simulator first before you even consider doing it live. If you can't get on a simulator for 6 months and at the end of that 6 months be in the black and be profitable, then don't even consider trying to do it live, because if you can't do it on the simulator, you sure can't do it live. So that's the one good thing about a simulator. They did, back in the old days, you paper traded and all, it wasn't realistic. But I can sit here and flip on this same chart with the same data back and forth from sim to live. And you're trading the same data. So, and everything works exactly the same except your money's real and your money isn't real. So you can't fool yourself. You could still cheat and break the rules and double down and do dumb things that you couldn't afford to do with live. So that's when I say don't fool yourself, don't lie to yourself. Follow the rules, do it right. And if for 6 months you can make money, then you're probably ready. But I'd probably shoot for a year. And if you can make money after a year, then you're probably ready to go live. Still doesn't mean you won't have that nervousness of going from play money to live money. But at least you've proven it works. At least you've proven you can do it. And you don't have to listen to somebody else say it doesn't work, the math doesn't work, the risk reward's not right. I mean, all the stuff you hear, forget that stuff. Prove to yourself it works first and then go live. And you don't have to worry about wondering if somebody else is right, who's wrong. You know if you can do it or you can't. And it's simple as that. And anyway, I'm getting off on a tangent, but that's a great trade. And if you were patient and waited on this one trade, there's a chance from one tick down just to where the range is, which is where I'd probably exit. That's 16 and a half points. You don't have to get all of them either. I'll hear people come on and comment 6 months from now, who says you can enter here and exit there? Well, nobody says you can, but you ought to be able to get, if you could just get half of that, that's eight points. But if you know what's going on, you know that prices are likely, or at least headed to try to make a new low here and probably headed to down here. So, but if you don't understand price action, no, you don't get that. No, it doesn't make any sense to you whatsoever. So I hope that's helpful to some of you, and maybe the guy that sent me the emails today is listening, and maybe that's helpful to him as well. But and notice what's happening here. You've got a new high, you pull back, you got a first entry, and you got a second measured leg down, second entry long on a measured move that fails and instantly goes down and goes out the other side. You know where we're headed. We're headed to here. Normally I wouldn't like going short there, and it's close to being a green one because you're going short right into that low, but this is the important low right down in here, and there's a chance you might even go to here, but I'm guessing you're going to go to, this is what we're trying to test, but we may even go and try to test these lows. And you can see that's right where we bounce. So this is a trap. It bounces off the trend line again. It doesn't restart the trend or anything like that. It just gives you reasons to consider that we're going to make another move down to this low. And it's real tempting to go long right there and even here. And both of them, by the time we get here, there's too much overlap. Even right here, you got 3 bars in a row that are overlapping. But this is pretty bullish. I'm willing to give that one a green one. But it's real close, because I always tell you, you hear me say this a lot lately, a lot of times by being a little more risky, especially on these trades like this, if you really understand what's going on, it's not quite as risky. But until you get really good at price action, you got to be careful doing this. And especially the fact that we've had all these continuations lately that keep selling off because the market's been so weak. So that really makes this green. But if you can catch these, and you wouldn't have got a runner on this one, but a lot of times on these, especially if it fails below and breaks, it breaks below and fails and then gets back to going, you can usually catch the low of the day or the low of the morning or the low of the afternoon or the high of the morning or the high of the afternoon if it's on the other side, and the thing just goes and goes and goes and goes. Well, here you didn't really have to be that aggressive. You can see by just waiting on the pattern that we teach, the reversal pattern, right here, you catch another runner right there. And again, you got a chance on one trade to eke out. Really, you're expecting it to go all the way up to here. That's 18 points. 18 points. But let's just say you only got a piece of it. Let's say you entered right here and you exit at the next high, which would be right there. That's 11 points. But, if you don't understand what's going on and you have no idea what prices are doing here or where they might be going or where they're not going, and even then, nothing's written in stone. Because you got your trend working up here and you would think it'd probably make another leg up, but it doesn't. It breaks down first and then it goes up to it gets your break of the trend line. But this is really strong. It's not going to go like that forever. That's why you got to get in early, because what happens is most amateurs watch it do this over and over and over, and they say, well, dadgummit, I'm getting in this time, and they get in right here, and they get stopped out just to watch it go exactly where they thought it was going to go. But they're too scared to enter here. They're still thinking short down here, and then they're getting up here. Now they're thinking long up here, and they need to be starting to think, hey, it may be time to start going short. And you see you get a couple of nice moves off there, but with this channel working up, I wasn't crazy about taking any of those longs. But anyway, notice the reversal pattern here. You bounce off the low of the range. What are the odds it's going to happen next? We're going back to the other side. That's exactly what happens here. It's pretty obvious where we're headed. But this is the great setup right here. Notice the new low. You pull back, you get a first entry. You pull back, you get a second entry. It fails. Look at that reversal bar. It was very bearish. It ticked out the bottom, traded down, and turned and went straight up and went out the other side. I just have a stop there. That's a big bar. But when it does like that, you got people trapped. And just, if not, put your stop right above it and take off with it, and there it goes. And really, you could count this is a double bottom, and that is a first entry short. So that would give you some reasons to enter this one. But I don't like that one at all, just because it's really close to here, to this last resistance area. And look at all those bars stacked up there in dojis. There's some reasons to consider it. It's probably worth making it green. But, if I'm in down here, I'm just going to hold my runner. I'm not going to add one on there. It's too risky adding on that late. And I just let my runner keep going. And I'm probably going to try to ride it here. So as long as we stay inside that trend line, I'm going to let my runner go. And usually what I'll do is when you get your first close outside, which is right there, I'll put my stop one tick below that bar. And I'll let that be where I'm going to exit unless it goes higher. And you notice it did. It comes down, it X's there. So if I was in that trade and I traded, and had that runner going, that's 13.5 points on just a single runner, just if you just got one runner. But notice you get the break. You don't quite make a new high, but that's close enough. Probably this thing could have reversed. But notice what it does. You don't want to go short there out of all that. It looks like it may reverse. You get a first entry short, pull back, and you get a second entry short there. It fails. You get a fairly bullish bar, go long right there. And this is one of those where they try to, it's like a double trap, and then they go lower. They make you think they got you trapped long. But hopefully you see that. At first I thought that was maybe the trend line, but it turns out it's the midline. And if you drag it down, you see it's a perfect measured distance down here. So then when it turns down and bounces again, I like adding on to it. So now you can have a double set going. You wouldn't have got any long-term runners on this one, but there's still several points in there. So that's a great setup there for two, and you don't even have to get runners. And when you got a double set, you can just scalp out of both of them and do really well. And then it turns down. This is like a little congestion area again. It pulls back, it tests it. This is a double bottom, so first entry, pull back second entry. There's another little trap there. I didn't like that one as much, but when it tried to turn down again, just go long right there. You got to assume, hey, we're going to make this top of the range now. And you can see that was the top of the range. And we go right to it, and where's it? It turns down instantly. I mean, that's your target. That's what generally happens on range days. It's not rocket science. You just have to understand what prices are trying to do and go with them. Then you got a little trend working down here. You get a break, and you figure you're going to get a new low. But this time I still wasn't sure if this was a midline or a trend line. So I don't like going short right there, especially when everything's been going up. Now, we do have the break of this channel and a new high. So and we did just come off the top. So there's a chance we're going lower, but you need to wait on that failed second entry long, that reversal pattern. And here we're still above the EMA. We do get below, but we don't never really pull back. And I thought maybe we'd get it here, but no, it just keeps going. Comes back up here, tests this again, turns down. Then you get a second entry short right here. It's really tempting to go short right there. And, you know, again, everything's above the EMA. You don't have a real reversal pattern in place. This is more sideways. So wait and see if you get the failed second entry long. And guess what? It turns up, it fails, and gives you a bearish bar. Go short. And then you're in this one, and you can get your scalp out of it. And maybe it heads to the other side. But I don't like this one because this is just too neutral, and everything's still above the EMA. You get a real bearish bar here, but again, I just don't think you want to go short out of any of the rest of this. I think you won't need to wait. And then guess what? It gets down here to where you're thinking the other trend line is. And sure enough, it bounces off of it perfectly, but you don't get a very good setup bar. So you just kind of wait. And you get a second entry long here, but that's another reason you want to wait is look at this trend line working down. There's no break of it yet. This is the first break of it. So wait and see if you get the trap or you get a chance for to bounce off the trend line again. And notice what happens here. You got a new low, first entry, pull back second entry. It fails. Even though this is not a very good signal bar, you can go long right there. And it's right off the trend line again. And look at it go. And again, you get runners out of this one again too. And if you just exit right there, if you just say, hey, I'm not going to risk it, I'm going to get what it'll give me from here. And if we get to right there, one tick in front of that, I'm exiting it. There's 5 points. Easy 5 points. And I don't like this is not really a breakout pullback. You want to see it get through and then have it double test this maybe and then go higher. But it just keeps going higher. But I kind of like this one because this is a double bottom here. This is a first entry. Pull back second entry. So it's like a failed second entry short. The trend line is still in play right up through there. So I like, and it went out the bottom and then turned up the top. So I like going long on that one. And hopefully you're going to maybe get a measured move on up like this first leg right here. But it doesn't. It just turns out to be a failed breakout. And this is just too iffy here. You don't want to, you got to assume that prices are trying to come back and test this for the breakout because this is important resistance. And before we go higher, prices are going to test it. And so we start working down and we test it and bounce off of it right there. I don't have my line on here anymore, but there's a trend line right there. Notice the break, move to a new low, and it bounces. And so I like this one. It's a second entry long. It's not a beautiful setup bar, but it went out the low side first and turned, and I had my stop there. And actually, I thought about canceling it, but it just and it takes off like that. And but I like the setup regardless. There's actually a couple of different reasons. You got that short-term trend line. This is kind of congestion. So it's like a failed break lower. It bounces off the former resistance that now acts as support. There's just a lot of different reasons to like that one, assuming that it's going to come back up and at least test the bottom of this range, EMA. There's not a lot of room in there that way. But when it breaks higher right there, you could have, it hung around and came back and forth. So you might have even got in there with a limit order, a little better entry. This one's real close to being green just because of the signal bar. But for all those other reasons, I liked it. And then, of course, we come up, we test the high, and there's really a double test of this high here, but when we tested it again, it can't go any higher. Now I like it to come back. That's a fairly bearish bar. I don't like the second entry. It's too neutral. It's almost more bullish than neutral. It takes off like a rocket, but if you ran up here, you're okay as well. Another runner. And this one just keeps going and going and going. So, and notice this is like a new high. Pull back first entry, pull back second entry. That's a failed second entry long. So you can get, and it went out the top, turns and goes down at the bottom. You could have waited on this bar. If you waited on this bar, I'd say you may not want to enter this one. You would probably want to try a limit order and see if it comes back. But if you waited on, if you just had your stop there because it went out the top first and you see it turning down, put your stop there, and if it goes on through, let it go. If not, maybe pull your order back a little bit on a limit order. And you see you could have gotten filled maybe 2 or 3 ticks into this big red bar, and then it just drops on down. But that's a failed second entry long, so you don't really need to wait on the bearish bar. Then you got a trend line working up. You get a close outside. It tries to go higher twice, so that's a double test of that trend line. This is your failed second entry long right here. Actually, no, I take that back. Your failed second entry long is here. This is your second entry counting off the high, and it really is still a failed second entry long here because this is a double top, so you can count this as the new high, pull back first entry, pull back second entry, and look how bearish that is, but it's right off the trend line and the EMA, the key entry point. If you'd had a good bearish bar, I would have said go short right here, but you need to wait on this better bar. This one's too big. You got to get in too low. But this is a nice one. Plus, you can treat it like a failed second entry short, or long rather, and then you can say the same thing here as well. And again, it's off the trend line, the EMA. If you waited on this bar, you probably want to use a limit order because you don't want to go short right into that support there. So let it break, drop your limit order back in here where you got room to get out, and notice it comes always, you could have got filled all the way back to here, and then you get out easy, and by doing that, when it takes off, you get another runner, and look at it go. You just let it ride down to where you get to the congestion. Got in right there. Let's just say you got in halfway back on that bar. And you wait till it gets congestion. You put it above the first bar it breaks above. Right there. Almost 9 points. And that got you into really the 2 o'clock hour. The next trade that you would have been thinking about is right here. And again, this is notice this big channel working down. This is your first break. That's a nice second entry short. Actually, maybe that one's not quite into 2 o'clock. But look at that trend line. There's your break, move to a new high, your reversal. You're way away from the EMA. You're probably going to try to test this low. It's a big bearish bar. It's another good short right there. Ends up just pretty much going sideways the rest of the day, but you're expecting it to try to test that low, and that's an easy trade right there. So great day, pretty straightforward, and you just have to be patient, wait on the good setups. Sometimes you got to sit there and watch. And I mean, it's hard to sit there. I mean, here's a good example. Once it broke higher here and just started kind of going sideways, you were able to take a trade here. Actually, that was at 11 o'clock my time, and you wouldn't have got another trade until 12 o'clock. And you'd be surprised how hard it is for some people to sit there for an hour and not take a trade. But that's what you got to do. And here was just almost as bad. You took this trade at 9:46. You didn't get to take another one. That's 30 minutes. And if you didn't take that one, if you skip that one, then you got to wait 10:45. What I say this one was? That's a whole hour you got to wait with not much happening. And a lot of traders just can't do that. They're constantly looking for an entry. But just remember, you want to enter at the key entry points. Those are off the trend lines. Those are pullbacks or corrections back to the trend line, the EMA, turns off the key support and resistance areas and ranges. So that's across here going short, down here going long. If you just keep that in mind and wait till you get to those points and then look for a setup, you'll be so much better off. But no, most people are just the whole way down there looking to get long, and they finally start trying to get short, and the whole way up they're trying to get short, and they finally decide, hey, I'll start trying to go long again, and then you got to get short, and it's a battle all day long, and they're just constantly looking, and that's what most traders suffer from. Just over trading and constantly just not being patient, not knowing where to enter, not understanding what prices are even doing. I mean, once you knew this was a range, prices are going to they're going to continue to try to go from one side to the other. They may not do it just like today once you got here, but you still had good, even if you took these trades, if you just took every trade that came back to this trend line or this resistance area, only one of them failed right here, and you really never got a setup bar there. Notice this, if I back out, there's no setup bar here. You got a bullish bar, and kind of a neutral, more bullish than bearish. You got a bearish bar there, a bearish bar there, a bearish bar there. Even if you come all the way back over to here, well, they wouldn't really had a range until kind of here. So, but this one doesn't really. You might have got trapped if it turned up. I can't remember if it went out the top part first and then came down. I think it went out the top first and then turned down. So you might have gotten trapped right there if you thought about entering like that. But I'd wait on. Usually when you're trading off these edges like this, you want to wait on a bearish bar. Simple as that. So anyway, we're 34 minutes into this today. I'm going to wrap it up. This is Mac with, actually, real quick, probably no chart lesson tomorrow. Generally, I don't do one on Fridays lately, but they're calling for a huge snowstorm here, and even if we don't have one, which we probably won't, I'm probably not going to trade tomorrow. So we'll just have to see how that. If I come in, I may do one, but I doubt I'm going to come in tomorrow. So anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.